Ever found yourself scrolling through financial websites, comparing interest rates, and wondering, wait, is this a bank or is it something else? Specifically, when you hear about Ally, that question often pops up, is Ally a bank or is it a credit union? It's a valid question, and understanding the difference is crucial for anyone managing their finances. Think about it. We use these terms interchangeably sometimes, but they represent fundamentally different structures. And in today's digital age, where traditional brick-and-mortar locations are becoming less common and online financial institutions are surging, it's even more important to know what you are dealing with. We are living in a time where personal finance is more accessible than ever. Online banks and credit unions are providing amazing tools for people to manage their money. But with the increase of options, there also is an increase in confusion. To really get to the bottom of this, we need to understand the core differences between banks and credit unions. It's not just about the name, it's about how they operate, who owns them, and what their primary goals are. So, let's dive in. What exactly distinguishes a bank from a credit union? Ownership and structure. A bank is a for-profit institution owned by shareholders. Its primary goal is to maximize profits for those shareholders. A credit union, on the other hand, is a not-for-profit cooperative owned by its members. Those members are the people who have accounts there. Their goal is to serve their members' financial needs. Profit distribution. Banks distribute profits to their shareholders. Credit unions reinvest profits back into the cooperative, often in the form of lower loan rates, higher savings rates, and fewer fees for their members. Membership. Banks are open to anyone. Credit unions typically have membership requirements, such as living or working in a specific area or belonging to a certain organization. However, those membership requirements are becoming increasingly loose. Regulatory oversight. Banks are typically regulated by the Federal Deposit Insurance Corporation, FDIC. Credit unions are typically regulated by the National Credit Union Administration, NCUA. Both institutions provide insurance that protects your deposits. Now, let's bring it back to Ally. So, is Ally a bank or a credit union? Ally is a bank. More specifically, it's an online bank. It's a subsidiary of Ally Financial Incorporated, a financial services company. Here's a breakdown. Ally Bank's history. Ally's roots go back to GMAC, General Motors Acceptance Corporation, which was the financing arm of General Motors. In 2009, GMAC Bank rebranded as Ally Bank, and in 2010, GMAC itself became Ally Financial. It has grown to become a very large online banking institution. Key features of Ally Bank. It's known for its online-only model, which allows it to offer competitive interest rates and low or no fees. Ally Bank offers a wide range of financial products, including checking accounts, savings accounts, certificates of deposit, CDs, and mortgage products. They also have Ally Invest, for those that wish to invest. Ally Financial also is heavily involved in auto financing. FDIC insurance. Ally Bank deposits are FDIC insured, meaning your money is protected up to the maximum allowed by law. This is a very important factor when choosing a financial institution. So, why do people sometimes confuse Ally with a credit union? Customer-centric approach. Ally Bank has built a reputation for providing excellent customer service and user-friendly online tools. This customer-centric approach can sometimes give the impression of a credit union's member-focused philosophy. They have worked very hard to create a very good reputation. Online model. The online model itself can sometimes blur the lines, as both online banks and credit unions often emphasize convenience and accessibility. While Ally Bank may share some similarities with credit unions in terms of customer service, it's essential to remember that it's a for-profit bank. Here are a few key takeaways. Banks are for-profit, while credit unions are not-for-profit cooperatives. Ally Bank is a for-profit, online bank. Ally Bank deposits are FDIC insured. Understanding the differences between banks and credit unions can help you make informed financial decisions. When choosing a financial institution, consider your individual needs and priorities. If you value competitive interest rates, low fees, and convenient online access, an online bank like Ally may be a good fit. If you prefer a member-owned cooperative with a strong community focus, a credit union may be a better choice. It is always important to do your own research and read the fine print. With that said, thanks for watching, and until next time.